Well, hello traders and investors. I'm LA Little and this is your daily NeoTA wrap. We take a look at these markets and we're doing it from a neoclassical perspective. And what does that mean? It means every day we take a look at these markets and we ask ourselves what happened today and what does it tell us about the coming ones. We do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's on the channel LA Little. To a weekly show as well. Sunday evenings, same time, same place. If you want to subscribe, reach up in the right-hand corner, do so. Anytime content's pushed, you get a notification, which is an easy way to stay up with what's going on. And man, a lot's been going on in these markets. It's been a relentless push to the top side today. It was a mixed market. We thought it would be a small range today. That was what we broadcast this morning to the traders. But you know, even in a small range, there are opportunities. There was a swing point test of a low that failed today on a biotech that looks like it has anywhere from 20, maybe 30% upside. Those are the kind of trades you got to try to find. You got to try to ferret them out. We broadcast that today, actually put it in the portfolio. We'll see how it does. But that's the sort of thing you need to be looking for because there's always opportunities. It's not just one stock. If you've got multiple stocks you're looking at, or if you have tools that will give you stocks to zero in on, you can catch those kind of trades. So let's take a look at the overnights here. We had the Nikkei. Actually, this is tonight. Nikkei's down big. I looked across the global indexes like I do every night. The Chinese markets, the Japanese markets, the Hong Kong markets, all those are set to fail. They went over under last night. It looked like they're set to pull back. Same thing on the DAX, the CACs, all of those. Switzerland market, those are all struggling as well. Can't get going. And folks, it all comes down to the currencies. You know, the dollar was down today, but that dollar just doesn't want to go down much more. It's ready to flip over, and that will help those other markets in Europe. It's not going to help Asia, and it's not probably going to help the U.S. unless the German and CACs and so forth really take a big spill upside. And I don't think we're going to get that kind of a move to cause that. Gold was up today. The gold stocks were down along with the market. Silver also up today. And oil was down again. Let's see, the USO here, where is it? Down 0.3. Oil is about to break lower. That also, I think, is going to be a negative for the U.S. markets. And I talked about an oil trade, I think, last night that we put on. Still have it on, still looking to make some money in that market. Let's start with the currencies because I believe the biggest event out here is the currencies. You had the dollar get up underneath the swing point low today. Does more volume, which says it can test it again tomorrow. And as we know, the employment number is tomorrow. So if we're looking here at the dollar, right, you've got the dollar pressing into the swing point low, pressing into this swing point low. It's got a little bit less volume compared to this one. A little bit more volume compared to that one. It's trying to hold it. We're going to have to see if it does. Right there where my line is kind of the price point. So let's get the number on. It's 24.61, and we're just up underneath that. So I'm really curious to see what the employment number does to the dollar tomorrow. The dollar is close to a flip around. If you look at the dollar just on an ABCD structure to the downside, we were kind of pointing this out last night saying, this thing is set up to try and do an ABCD structure to the downside, has done that ABCD structure now, and it's pretty much done. And so I suspect this thing could flip around here at any point, and that's where we sit on the dollar. When it does, that's probably going to hurt the commodities, going to hurt the oil markets, probably going to put some pressure on the gold market initially at least, unless there's a fear trade that starts to develop. And there's some other things, some other ramifications that you'll see as a result of that. The currencies, folks, are what's moving these markets right now, and you got to stay in tune with what they're doing. If we go over here on the euro actually failed at the swing point high, had less volume. And if we look at the euro on a weekly, it's up there at that swing point high, test failing as well on the weekly. That to me says, hey, if the euro is going to go back down, that's going to help those European markets a little bit, but that's going to press against the Asian markets in general. If we look at the UUP again, I want to go back to the monthly chart here. Let's grab the monthly. On the monthly chart, this move has been to the top side. It's not to the downside at all. It's to the top side. And so if I look at this and say, okay, what's going on, right? I've pointed this out elsewhere already. You got a big range that has formed. It's about in that area there. You're down towards the bottom of this range now, so you're down in this area down here. And that's kind of the bottom end of this thing. This is not where you want to be shorting the dollar. You actually want to be thinking about buying the dollar if you're going to do anything. So you're down in that area where the least risk is available to you. It's the time to try and make a buy. So if anybody wanted to make the trade, I'd shorted this thing, made a little bit of money on it, was questioning as to why I did, because the trade was there. But now the trade's not there, and the longer term picture I was talking about, I suspect is going to start to come true, which is going to be the dollar is going to move back the other way, right? It's like good cop, bad cop with the Fed anymore. You got Yellen saying everything's good. You got everybody else saying that we got to raise rates. And they keep pushing this thing in and out of this big range, and on the dollar, we're talking 4 or 5%. It's a pretty big move on a currency. Let's go to our markets. Let's look at the tells tonight and see if there are any. And so I'm going to go to the general markets. I'll start out here with the S&P 500. So if I pop into the S&P 500, today was a very quiet day. But you actually got under, had a little bit more volume on the under. You didn't stay under. But again, this is just telling you this thing's extended. It's pushed and pushed and pushed. And, if you're pushing, if you're pushing on this now on the long side, you're really asking to get your head handed to you. Now, I want to just show you, if you go back to a weekly chart, I want to show you the kind of move that this thing can do against you, right? I mean, don't forget that, when you have these straight up moves, you're destined to get one of these big, nice spikes back down the other way at some point. You don't know when it's going to happen, but that's always a possibility. And so if you're sitting here and you're pushing this, just realize that you could get one of those big spikes back down. And it would be normal. Notice that as soon as it got the spike down, it got the spike back up. I mean, that would be a normal kind of case, right? Eventually, maybe we're going to give it up and do it again, right, to the downside here again. But, right now, that's not what it's doing. So we'll see if it wants to roll. This week was supposed to be a sideways to down. We're certainly not going to have a down unless we get a huge surprise tomorrow. I suspect we still have a shot at the sideways. And I say that because, again, you got mixed pictures here. Looks like the currencies are getting ready to turn. That's suggesting something tomorrow's not going to be quite what this market wants. You got an inside day on the NASDAQ, so nothing there. You actually got under the lows on the NDX with a little bit more volume. So that actually looks like that might be trying to trade down a little bit. But if you go over to the Russell, even with the strength or the weakness in the oil market, the Russell is still holding up here at the highs. So the Russell's certainly not giving it up, at least not yet. The Russell's trying to make it to that swing, to the breakdown bar's high. The Russell, compared to every other market, has been the weakest one, right? And it's trying to catch up. It's doing a retest, regen on the weekly, trying to get to a full retest, which is this area right here. It's almost there. We'll see if that makes a difference when it gets there. Trying to play catch up and not quite there. We actually saw the same sort of thing. I was referring to the overseas markets. We're seeing the same sort of thing over there where you've extended to a point now where it's going to be hard to keep going up. If we look at Shanghai, for example, Shanghai pushes up, but it's not quite into that high yet, 30.28. It got as high as about 30.20, I think, 30.23. So you're almost to the high. You're not pushing the same volume. This looks like it's going to try and fell up there. If I look at the Hong Kong market, it already did. It pushed up and over today or last night, back under, a little less volume. That looks like that's going to try to pull back. If I look at that Nikkei, even without seeing those numbers tonight, the Nikkei's in trouble. Nikkei is trying to pull back, and that's what a strong yen will do to that market. If we go over to Europe and look in the European markets, I'll start with Switzerland. Switzerland still cannot get anything going here. There's certain sectors that are moving. For example, you've got the basic materials sector in Swiss market that's moving, but there's not a lot else moving over there. There's a few, right? But there's not many. And it's just like it started out here with a few. They're fighting a currency problem, though, that the European markets are benefiting from, and that is the German DAX still hanging up at these highs, and the CAC itself also up in that level. But they're both stuck in the Draghi bar, and they can't get out of it. And so for now, they look stuck. They may get a little topside pressure with a weaker euro. But overall, it's a catch-22 anymore. For so long, these countries have all devalued their currencies, right? And been able to push them down and been able to push their markets up as a result. Well, that's great, I guess, if you're that market for the period of time that it works. But folks, you're robbing Peter to pay Paul. It's not a long-term solution. You're just kicking the can down the road a little bit, right? And you're kind of getting by with that process in the meantime. It's not going to work long term. The way things are going to work long term is you're going to get more growth, which means you're going to have more demand, or you're going to get this debt worked off in a different way, which is you're going to get restructured. And right now, nobody wants to restructure. And if I pull up, I can't easily pull up, what is it, EURUSD, I think? No, it wasn't that. But anyway, the European banks have been hit hard. And if you look here in the U.S. banks, these banks can't get going either. Each push up, as this market has pushed up this last move, they can't make it back to the highs. This is the major sector in the S&P 500, along with the technology. Now, technology has kicked into gear. As you look at the XLK, right, it's pushed up there, making new highs. Technology, one more time, is trying to carry this market. And that's a good sign. You want tech to carry, but you got to get other people to participate. You can't get the financials. The other big sector is the XLV. That one can't get going either. You got a situation here where some of the major sectors can't move, and they've already moved a lot off the bottom in those that have moved. For example, if I look over at like the XLB, you've had huge moves here, but these are extended, and I don't think they're the ones that are going to carry this farther. XLE is another example where you had a huge short covering rally. Those are about played out. You got to switch back over. You got to have technology. You got to have financials. You got to have healthcare. You got to have some of these others push you the next leg if you're going to go. And frankly, that next leg is going to be after a rest, potentially a pullback. And that's where we're at tonight, coming into the employment numbers. We may get the pop up on them, but I don't think it's going to stick. That's where I sit tonight. And I hope that helps you navigate tomorrow. Check in with me on Sunday. We'll do the weekly show. We'll take a little bit broader of a perspective, and we'll see how this market wants to handle the employment numbers. Remember, earnings are up in 2 weeks. They have discounted them greatly, but you've already had the huge run expecting exactly that. It's going to be interesting to see how earnings end up. Have a great night. Take care. Have a good weekend. I'll see you next time. Good night.